Great. So welcome to our free session, courtesy of our CM Online College. And of course, I want us to look at a concept under what we call statement of cash flows. Now, my first statement will be, when you are doing financial accounting, we normally focus on the number of entries, right? We are normally focusing on the number of entries you are going to make. So again, number two, we don't mark the workings, but we mark what is required. For example, in this question, you are required to prepare a statement of cash flows. That's all. So all the workings that will help you to get the answers are not marked. We only mark the postings or the entries. And therefore, for you to be on the safer side, as you address the question, please first of all bring the entire format, so that at any given time you read a question, you come across an item, you adjust it directly. So that now will take me to this section where we'll be able to put our items. So let's say our statement of cash flows will be recorded in this particular section. And I will start with the number one item. I'll start with the number one item, that is the title. Number one item, so I'll be able to talk about the title. Thank you. So here I talk about 𝗕𝗵𝘆𝘀𝗶𝗰 Limited. 𝗕𝗵𝘆𝘀𝗶𝗰 Limited. Statement of cash flows. 𝗕𝗵𝘆𝘀𝗀𝗃 Limited. Statement of cash flows for the duration. Statement of cash flows for the period ended or for the year ended. For the year ended, so what do we have there? 30th September 2025. So we have 30th September 2025. That's what we have. Now, as you prepare the statement of cash flows, definitely we'll have at least two columns here. I hope the figures are given in thousands. So we have to take care of that. Shillings. The first item, we'll talk about the titles. We talk about cash flows from operating activities, right? So we talk about cash flows or talk about operating activities. Operating activities. Now, under operating activities, we know what to start with. We'll do all those adjustments and, of course, get to what we call investing activities. Investing activities. Then, of course, we finalize with what we call financing activities. Financing activities. Good. What is the starting point? So the starting point depends on what you have been given in the question. The usual starting point is what we call profit before tax. So if you have profit before tax, that will be your starting point. If you don't have that, maybe you have profit for the year after adjustment for the taxes, you now have what was supposed to be transferred to the statement of financial position under reserves. That is what you pick, right? And you'll understand what normally affects your profit after tax. If dividends were paid, then of course that will affect your profit after tax. In our question, I can see you have been given the appropriation account for the year ended 30th September 2025. And the first item there is profit before tax, which happened to be 21,600. So imagine you've not even looked at the additional information. You just come and give us here profit before tax. When you indicate 21,600, imagine you are copying and pasting. So 21,600 will already give you a mark, just like that. Then we can move down and look at the items given there. We have now corporate tax. We have dividends, both interim and proposed. The statement of financial position is given there for the 2 years. The comparative statements are given there. Then down we go to additional information. Why am I going to additional information? There are some things that you'll be copying and pasting from the additional information. Like number one, we are being told that the revaluation reserve relates to freehold land and building. So it means any increase in the value of land and buildings, one of them is as a result of the upward revaluation. And revaluation is not cash. What are we preparing? Statement of cash flows. We are tracing the movement of cash. If it is not money coming in or going out, then it is referred to as hot air. It should not affect our statement of cash flows. That is why the first thing we'll be doing after recording the profit before tax is to do adjustment for non-cash items, right? Now, in this meeting, is there someone who has ever gone to the bank and paid for this expense in the name of depreciation expense? Is there someone, either this year or last year, you went to the bank and of course paid for the depreciation expense for last year or for even just a single month? Is there someone who has ever done that? Is there a company here who have ever drawn a check in the name of depreciation expense for a given financial year? Have you ever done that? Depreciation expense. Depreciation expense. So let's say for the last year, 2025, so somebody went to the bank and paid for that. Do you have any? Yes or no? Do we have someone who has ever paid for depreciation expense? Yes? Say something? No. But so it means anytime we are going to have depreciation here, it affected our cash, and therefore we have to adjust it accordingly. Then information number 2, we are told that depreciation on plant and machinery amounted to 10,350 or amounting to 10,350 was charged to the statement of profit or loss account during the year ended 30th September 2025. Now, this is the question. We have said depreciation is a non-cash item. In the process of getting profit before tax, depreciation as an expense was deducted, right? So we had a figure higher than this, and since depreciation was recorded as an expense, it reduced our figure to 21,600. So if I want to get back to the real cash flow, what do I do with the depreciation expense? Should I add it or deduct? Should I add it back or less? Given that it is an non-cash item and it was used to reduce our profit before tax. So we add back depreciation expense, and therefore we'll now come up with just a subsection here and call it adjustment for non-cash. Adjustment for non-cash items. Adjustment for non-cash items. So one of them is depreciation. One of them is the depreciation. How much is it? 10,350. So we add it back. 10,350 because it was deducted. In doing so, so look at it. I've not even done any calculation. I've just copied these two things. Already I'm having 2 marks. Right? Information number 4. During the year ended 30th September 2025, part of the investment was sold at a profit of 1440. At a profit of 1440. Yes, you will have the total income minus total expenses to give you profits. But whatever you normally receive into your bank account is not the profit, but is the total proceeds, right? Is the total proceeds when you sell an item or when you dispose an asset. So in that particular process, yes, an investment was disposed, and it was disposed at a profit. Remember, this profit was taken to the income statement and it exaggerated or increased our income. we do not know whether this profit was finally paid into the bank account of this company. So, in the process of arriving at 21,600, that profit was added. It is part of 21,600. And since we cannot tell whether it was finally paid into the bank account, what do we do to the profit on investment? What are we supposed to do to the profit on investment? Profit on investment. Should we add or less? Profit on investment. We are supposed to deduct because it exaggerated, even though we have not confirmed whether it was paid into the bank account of this particular company. So that gives us 1440. Number 5. During the year ended 30th September 2025, impairment of goodwill was 3780. So, goodwill is an intangible asset, right? Depreciation is from the tangible assets. What have we done to the depreciation? It is an uncash item, and it was recorded as an expense. So we call it hot air because it is not affecting cash flows. The same way, the impairment of goodwill was also recorded as an expense and it reduced the profits of the company. So it means in the process of arriving at 21,600, impairment loss was actually deducted. How then do we get back to the correct cash flows? How do we get back to the correct cash flows? What are we supposed to do to the impairment of goodwill? Impairment of goodwill. Do we add or less? Do we add or less? We add it back, right? Thank you. So that gives us a figure of 3780. Good. We said that the profit on investment is supposed to be deducted because it exaggerated our incomes. Good. Then we move to number 6. The quoted short-term investments are 3-month treasury bills. The quoted short-term investments are 3 months treasury bills. What does it mean? Then it means this will be recorded as cash and cash equivalents, right? So where we have the cash at the bank, cash on hand, right? Where we have short-term investments, right? Where we have notes receivable, where we have bank overdrafts, where we have short-term notes payable, right? All that will be recorded under cash and cash equivalents. And therefore, we are not going to adjust it at this particular point. Those are the obvious things we are able to see. Now, the profit on investment has been adjusted. There's something we are looking for. Number 1, is there any disposal of an item? Yes. Additional information. Number 3. During the year ended 30th September 2025, plant with a net book value of 6750 was sold for 13,230. The plant's original cost was 27,000. Number 3, yes, we are dealing with it. Correct. Thank you for that. Now, during the year, the company had a plant whose net book value was 6750. We have 2 ways of dealing with it. We can do it at cost or at net book value. We can do it at cost or net book value. When you decide to do it at net book value, this is what will happen. You have to understand now, in the statement of financial position, do we have the planted machinery given at cost? That is not given. So what we have been given here is given at net book value. The depreciation that was given, again, was on planted machinery. So what are we going to do? You can decide to come up with a T account or just deal with it independently. This is what we are trying to talk about here. We'll have 3 accounts, right? So plant, and machinery. We talk about at net book value, right? Then we'll have what we call, actually, we can just have one. So we talk about disposal account. Disposal account. Now, do we have balance brought down of this plant? Balance brought down. Remember, we are maintaining it at net book value. The balance at the end of the year 2024, plant and machinery, we have 57,150. 57,150. Good. If an asset account or non-current asset account is maintained at net book value, then number one, depreciation will affect the account. Revaluation will affect the account. Purchase of a new item will affect the account. So let's see. So the opening balance is 57,150. Then during the year, there was a disposal, right? There was a disposal. So can somebody give us the net book value of the asset that was disposed? An item of plant was disposed. At what net book value? Are you able to see that? There's an item from this account that was disposed. What was its net book value? What was its net book value? Somebody. It must be somewhere there. Information number 3. The net book value of the asset disposed was 67.50. So we disposed here at 67.50. Good. As you dispose, it is taken to the disposal account on the debit side. So plant and machinery is giving us 67.50. Good. Still talking under this, or talking about that, we have said depreciation will also affect this account. What was the depreciation amount for the plant and machinery during the year? It has been given to us under additional information number 2. That is 10,350. So I'll come here and talk about 10,350. Good. Do we have any revaluation of the plant and machinery? Do we have any revaluation of plant and machinery? Revaluation? Yes or no? Do we have any revaluation? It can be upward or downward. We call it fair value adjustment. Do we have any? Revaluation is there, but is it relating to the plant and machinery? Is it relating to the plant and machinery? No, it does not relate. So we don't have revaluation which could have affected this account. Again, if you go to our additional information, is there anywhere we have been told that this company took a loan of acquiring a new plant? In other words, if you've gone to the bank and they have given you a loan in form of a plant and machinery, you are going to credit the loan account and debit the asset account with the value of the new plant and machinery. Do we have such a case in our question? No. There is no asset financing loan that was actually taken. There was no loan taken in form of an asset, specifically plant and machinery. So there is nothing like that which would have affected our account. So having done all that, we are being told that balance carried down in the plant and machinery account must be the net book value given under the year 2025, which happened to be 52,740. 52,740. So let's come here. Let's come here and check. We want to get the total amount on the credit side compared to what we have on the debit side. So what are you getting on the credit side? What are you getting on the credit side? Ungekuwa na revaluation tungefanya aje? So if you are to have revaluation, upward revaluation, remember revaluation will increase the value of the asset. We record it here. Revaluation, if it is upward revaluation, we record it here. And of course, in this case, it is 0. Right? I've recorded it there. So how much do we have? If there was revaluation out, it have affected the plant and machinery accounts? Yes, we could have recorded it. If it is upward, right? Upward revaluation. Downward revaluation, we record it on the credit side. Thank you. So how much are we having here on the credit side? 6750 plus 10350 plus 52740. How did you get depreciation? We have been given that in the question. We have been given that in the question. So we have 69,840. 69,840. 69,840. So automatically you can see 69,840 is more than 57,150. So bring the 69,840 here. Good. The next question is, how much do we need to make this account balance? For us, what are we supposed to add to the 57,150 plus 0 to give us 69,840? How much do we need? $12,690. So we need 12,690. What does it represent? Now, since we said there was no loan taken in form of an asset, the only thing that can now affect or relates to this is a new plant and machinery that was purchased. And in the process of purchasing it, this company incurred money. What happened when you purchase? You give money to your supplier and you get the asset. That is cash outflow. That is cash outflow. So as you go to the investments, right? Under investment, you will first of all tell us we have what we call purchase. Purchase of plant and machinery. How much is it? 12,690. Remember, 12,690 is a cash outflow, so you put it in negative. That is cash outflow. Perfect. Let's now go back and attack the disposal account. Which asset are we disposing? Plant and machinery. We are disposing it at net book value. When you come here, you record it at net book value if you have transferred from this point. Then the next thing, on the credit side of the disposal account, you will tell us the amount this company received in exchange of their asset. Do we have that? Sometimes the examiner will give you this in two ways. Number one, the gain or loss on disposal, and then you're supposed to get the proceeds, right? Or sometimes they give you proceeds, then it's upon you to identify the gain or loss on disposal. So what have you been given in the question? Proceeds on disposal of the machinery. How much is it? Proceeds on the disposal of the machinery or plant. How much did the company receive in exchange of their asset? How much is it? 13? Bernard is telling us 13,230. Are we able to see that? The rest are not able to see that. Kindly confirm. Have you been able to see what Bernard is giving us there? Additional information number 3. Additional information number 3. The company disposed their asset and the proceeds was 13,230. So number 1, this one here was actually paid into the bank account. So bank 13,230. From this part only, look at it. We are getting 13,230 from the bank on the disposal of the plant and machinery. So you come to the investment or investing activities here and talk about proceeds on disposal of machinery. How much is it? 13,230. That is a cash inflow. I've not even calculated anything. I've copied the figure from the additional information and already I'm having a mark there. Good. So let's come back and attack the disposal account. The value of the asset this company is disposing as at the time of disposal was 6750. But whoever purchased this asset gave them 13 to 30. Was this asset disposed at a gain or a loss? Was it disposed at a gain or a loss? You have an asset, you have your phone. Its value is 6750 and someone offered you 13 to 30. Is it a loss or a gain, Esther? Is it a gain? Esther, recheck. Your asset is only 6,000 and somebody has given you 13,000. That's a gain, right? That's a gain. Good. Now, how do we then balance the disposal account? Because disposal account is balanced by a figure which is being taken to the income statement, either as a gain or a loss. So let's balance this account. Let's balance the disposal account. So 13 to 30, 13 to 30. Whatever will be balancing my account will be on the debit side of the disposal account, and that will go to income statement. How much is it? How much do I take to the income statement? 64.80. Okay, so we have 64.80. Good. I hope I'm addressing someone who has been taught double entry. I'm addressing someone who has been taught double entry. For every debit, there must be a credit, right? Now, this item being taken to the income statement, in the disposal account, I have debited it, right? In the disposal, so disposal account, I'm debiting it in the disposal account, that is 64.80, and you can see it is going to income statement. So I'll be crediting the income statement, right, with the same figure 64.80. When I take a credit to the income statement, am I talking about again, an income or an expense? When you take a credit transaction to the income statement, are you talking about an income or an expense? It is an income. It is the gain. Remember, now look at it from this point. The real amount that we received into the bank account of this company is 13,230, which we have recorded here as proceeds on disposal of machinery. That is the real cash. Now, there's this amount we are taking to the income statement and referring to it as a gain, right? Or an income. As you are preparing your income statement, after getting the gross profit, you came up with some items called other income. And one of them was the gain on disposal of machinery. So it means our profit before tax of 21,600 includes that gain of 64.80. We have been able to see that 64.80 is not real cash. The real cash is 13 to 30. Now the question is, our 21,600 is exaggerated by this gain. What am I supposed to do with the gain on disposal of machinery? The 64.80. What am I supposed to do with it? Should I add or deduct? Should I add or deduct? I should deduct the exaggeration, right? So I'll be able to deduct the gain on disposal of machinery. Good. That is when you are to do this when the account is maintained at net book value. What if this was to be maintained at cost? If the account was to be maintained at cost, we must get plant and machinery at cost, right? We must get it at cost. Then we have to come up with what we call accumulated depreciation account, right? Then we now end up with the disposal account. You have to give us the balance brought down of our machinery maintained at cost. We do not have that. You have to give us the accumulated depreciation of the entire PPE. We don't have that. So maybe in our next question, we'll be able to see a question whereby, or I'll be able to select a question where you are given the cost and not net book value. So I want to attack the disposal account. Sorry, I jumped late. Is this the indirect method? Yes, we are doing the indirect method. Good. I want to attack the disposal account, but working with the cost. The first thing, we are told that this item which is being disposed, this machinery that is being disposed, its cost was 27,000, right? So as we have the cost, we are going to dispose, right? So disposal, we dispose at cost of 27,000. That is number one. Number two, if you maintain the plant and machinery account at cost, you are not going to bring depreciation. The only thing that will be affecting now the account at cost is balance brought down, again at cost, balance carried down, again at cost, right? The balance carried down that is given there. Then what you are going to do is that revaluation, if it is there, the whole of it will be affecting now our account. We're doing it there. Then you look at now bank, if there's any purchase. Whether you do it at cost or at net book value, will arrive at the same figure. So allow us to look at maybe next question where you will be required to do it at cost. My interest is about this disposal being done at cost. So we take 27,000 and bring it to the disposal account. So plant and machinery bringing to us 27,000. We are eliminating this asset from the books. It has been disposed. So why should we maintain its accumulated depreciation yet it has been disposed? So what we are doing here, we are eliminating it from the books of this company. Now we have balance brought down under accumulated depreciation. Then of course we talk about income statement, the depreciation expense for the year, which happened to be 10,350, right? It will affect this. In other words, it will increase the amount in the accumulated depreciation account. Now, since the asset whose cost is 27,000 is being disposed, we have to also eliminate its accumulated depreciation. So we'll now take it to the disposal. My question is very simple. What is the accumulated depreciation of the asset we are disposing? What is the accumulated depreciation of the asset we are disposing? Remember, net book value, so this will guide you, is equal to cost minus accumulated depreciation. Do we have the net book value of our asset? Yes, 6750. Do we have the cost? Yes, 27,000. Do we have accumulated depreciation? No. So can you make accumulated depreciation the subject of the formula? Then you give me your result. What are you getting? Accumulated depreciation. Accumulated depreciation. $20 to $50. $20 to $50. So what we are removing from the accumulated depreciation account, the whole of it, is 20 to 50. Where is it going to? Disposal. Now that it has been debited, it will be credited here, right? So accumulated depreciation is giving us 20 to 50. Perfect. From there, do we have proceeds on disposal of this asset? Yes. We now talk about the proceeds, which of course went to the bank. Of how much? The proceeds was 13 to 30. 13 to 30. This account has to balance. So definitely I can see 13 to 30 plus 20 to 50 will give us a figure of 33,480. 33,480 is more than this, and therefore our balancing figure will be on the debit side of the disposal account, and that balancing figure will go to income statement. My question will be, how much is this balancing figure? Because this one here will be 33,480. 33,480. Good. So how much is this balancing figure? How much is this balancing figure? $64.80. $64.80. So we have said, if I debit the disposal account, I'll be crediting the income statement, and a credit means it is an income, and that automatically represents gain on disposal of our PPE. So that's another method of getting the figures when the account is maintained at cost. When the account is maintained at cost. Are we together up to that point? 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 Great. Now, having done that, let's see our additional information here. It was about the gain and the losses and all that, so we've been able to capture that. We've been able to capture all that. Can we now go ahead, since we are done with all the adjustments, can we now go ahead and get what we call our cash flows before adjustment for? So we'll come here and talk about cash flows before adjustment for working capital. Cash flows before adjustment for working capital. How much do we have? So you add everything from 21,600, you add what's supposed to be added, you less what is supposed to less. So what are we getting? What are we getting? That is 21,600 plus 10,350 minus 1440 plus 3780 minus 6480. What are we getting? What are we getting? $27,810. $27,810. So we have 27,800 and 27,810. Correct. Now, look at our statement here. It is cash flows before adjustment for working capital. Then it means the next thing will be adjustment for working capital. The working capital, the most common ones are normally 3 in number. You look at the inventory, you look at the trade receivables, you look at the trade payables. Then, of course, in exceptional cases, the examiner will give you the prepayments and accruals. In rare cases, you'll have prepayments and accruals. So let's now deal with the three major working capital items. And it will be either increase or decrease in that particular item. So I'll start with, I'll skip the part, I'll just leave space for the increase or decrease, but I'll talk about inventory. I'll talk about trade receivables, then of course trade payables. Trade receivables, then trade payables. Increase or decrease, that will come later. If you want to get your free marks, then again visit this section here. Go to your inventory that has been given in the year 2024 and 2025. What normally happens is this. When your inventory increases, then it means you purchased more. What happens if you do purchases? Money will be going out of the business. When your inventory reduces, then it means you've sold what you are having. What has happened? When you do sales, you receive money. That is cash inflow. So, increase in inventory is cash outflow. We put negative. Increase in trade receivables, you've given more goods on credit. That is cash outflow. Decrease in trade receivables means your customers have now paid what they owe you, and therefore you will be talking about cash inflows, right? And that is the reverse now for the trade payables. Trade payables, if I take more goods on credit as a company, that is cash inflow, right? If what I owed my suppliers have reduced, then it means I've been able to settle the outstanding amounts, and therefore it is a cash outflow. That's how it operates. So even before you look at the sign, whether negative or positive, just give me the differences, right? So the inventory figure, I can see 78,300 and I have 9450. What is the difference between those two figures? What is the difference between the two amounts? 9450, 78,300. Somebody? $12,150. So just put it here. $12,150. I'll bring the sign later. Trade receivables. Trade receivables. That is 55 to 60, then 70 to 100. What's the difference between the two? What's the difference between the two? 55 to 60, then 70 to 100. Debit and credit. I want you to go to the statement of financial position and we are comparing the balances of the same item. Somebody's having 14,940, 14,950, right? So which one should we rely on? 14,940? 14,940. Let's go to the trade payables. Trade payables. So trade payables is under current liabilities. I can see we have 52,650, 47,250. Yes, 52,650, 47,250. What's the difference? What's the difference between the two? 5,400, right? 5,400. Great. So let's now get back to inventory. Inventories, I can see in 2025 it is 90,450. In 2024 it was 78. there is increase in inventory. Increase in inventory means we purchased more, and that is cash outflow. So increase in inventory, that is cash outflow. So you just put this in negative. Trade receivables. In 2025, it is 55 to 60. In 2027, it is 70 to 100. There's a reduction in trade receivables. So it means our customers actually paid. So decrease in trade receivables is a cash inflow, and we leave it in positive form. Trade payables. So trade payables, in 2025, we have 52,650. In 2024, we earned 47,250. What we owe our suppliers have increased. We've received more goods on credit, and that is cash inflow. So increase in trade payables is basically a cash inflow item, right? So we now want to talk about cash flows. Cash flows now from before to cash flows after. Adjustment for working capital. So how much will you have here? You take 27,810 minus 12,150 plus 14,940 plus 5,400. What are you getting? What are you getting there? Cash flows after adjustment for working capital. Cash flows after adjustment for working capital. Cash flows after adjustment for working capital. I can see 136,000. I can see 36,000. So which one should we follow? Which one should we follow? Add it, redo it. Uh-huh. 36 is the majority, so we have 36,000. Good. That is what we have. Now, after that, we have to do adjustment for some two items here, right? One of them is finance cost paid. Initially, we are calling it interest paid, but the name of interest changed to what we call finance cost. We talk about finance cost paid. Then, of course, we have tax paid. The finance cost paid, we'll have it from this statement here. It is advisable you do it this way too, but on the safer side. So we talk about finance cost as a liability, right? Finance cost payable as a liability, right? Finance cost payable. So do we have balance brought down of the opening liability? You go to the statement of financial position under current liabilities and check, do we have finance cost payable, right? So in our current liabilities, we have trade payables, bank overdraft, proposed dividends. So there's nothing like finance cost payable. What if it has been put to be part of the trade payables and that information is given under additional information? We went through the entire additional information and it was not existing. So automatically, we don't have opening balance of the finance cost payable. If you have incurred any expense and you don't pay it, it becomes a liability. So go to the statement of profit or loss and check, do we have finance cost for the year? From the income statement. Income statement, did they mention anything to do with finance cost for the year? There is none. So we put a 0 there. Then you go to the statement of financial position again under current liabilities in 2025. Do we have balance carried down? There is none. So automatically it means there is nothing like finance cost payable that was actually paid during there, because if we add, we have to balance this account. Balancing this account means there's an amount that was paid via the bank, which will be recording as finance cost paid. As finance cost paid. So this one is not existing in our question. Let's look at the tax payable. I think we have something to do with the tax. Yes, we have something to do with tax. So I'll simply just change the title, since all of them are liabilities, to talk about tax. If it's just a simple tax, we can talk about current tax, right? But let me put it as tax payable. Tax payable. So balance brought down, we are getting it from 2024. The closing balance of taxation under current liabilities, I can see 5,400, right? Then balance carried down, at the end of the year, I can see 7380. 7380. Good. Now, the question is, do we have tax expense during the year? Because if you don't pay an expense that has been incurred during the year, automatically translates to a liability. If you go to the appropriation account, we have profit before tax. Then below it, we have what we call corporate taxation of 8,100, right? So I'll come here and record it from the income statement. This is an expense of 8,100. Do we have deferred tax liability? Under non-current liabilities, we only have the debentures. Good. Now, we have opening amount which you are supposed to pay to PRA of 5,400, right? From last year, you've not paid it. Then, during the current year, you've also done trading. You've been able to engage in business, and in the process, there are some taxes that have also accumulated. Of how much? Of 8,100. So the question is, how much do you owe KRA in total? What you had not paid at the beginning of the year, plus what you've accumulated during the year. So how much do you owe KRA in total? Add all these figures, column wise. 5,400, 8,100. How much do you owe KRA? How much? How much do you owe the tax authority? Get the summation. 13,500. So it gives us 13,500. Total of this side, 13,500. Now, when we look at your books, we are finding that you are now telling us you don't owe them 13,500. You only owe them 7380. What has happened? It means you've paid them some amount. That amount which you've paid is what we record under tax paid. Pardon, where do we get the 8,100? The 8,100, this is income statement. So go to income statement. We have profit before tax. Then below that statement, there is now corporate tax for the year. The tax expense. That's where I got the 8,100. Good. So cumulatively, opening tax liability plus the tax liability or expense for the year which you've not paid. So we talk about 13,500, which is supposed to pay in total. But when you look at your closing balance in the books and liabilities, we are finding that you are now telling us you only owe them 7380. What has happened to the remaining amount which you owe them? The missing figure represents what you pay to the tax authority. So that will automatically deduct money from the bank account. And how much is it? From your workings, 61.20 is what you now owe the tax authority. So that takes me to this particular section here, 61.20. So I'll come to this part and talk about 61.20. That is an expense. So let's talk about the total amount, which will be cash flows from or cash flows used in. Can you take 36,000 minus 61.20? I'll get a positive. So cash flows from, right? About net cash flows. Net cash flows from operating activities. Net cash flows from operating activities. So how much will we have there? Net cash flows from operating activities. 29,880. $29,880. Good. So we need to do now so many adjustments with regards to the investing activities, then of course financing activities. What you need to understand, as you've seen, it is very interesting. Look at the statement of financial position. Look at it, the one that we have been given. We have started with the non-current assets. So most of the things that are dealing with the non-current assets will be recorded under investing activities. Current assets and current liabilities, you've seen where we are talking about them under the working capital items. Non-current liabilities and the equity items will be dealt with under what we call financing activities. Because once you have your total assets, will tell us it is financed by, then you now list the capital or equity items, right? The share capital plus all the reserves, then of course the non-current liabilities, right? So that's what we'll be able to deal with. Good. So I can see time is not on our side. And this question, we have to complete it during the normal session. So for those who have not joined our classes, you've just seen what is happening, and it is good you make up your mind and join our sessions. What I can confirm to you that our exams will be done in August 2026 from 17th of August, right? And you've seen what we have here. So we have a nice package for you, right? Especially those who are working that are having limited time during the day. We have a perfect package for you. You either join our early morning class that starts from 5 to 7, or you join our evening classes that starts from as early as 6. And of course, depending on the number of classes you will be having, or the day as per the timetable, and ends at latest 10 p.m. Of course, each session will be 2 hours. We cannot have 4 hour session for the same unit. No, it will be a maximum of 2 hours. That's the first package we have for you, right? So if you are getting to work very early in the morning, you can join the evening. If you are getting to work from work very late in the evening, you join the early morning. It will work for you, right? The good thing is you don't have to get the entire amount. No. Get half, start your class, clear the balance after 30 days. So account, the unit name. Are you referring to financial accounting? That is what will be your account name. Do you want to add the second unit? That will be part of the account name. Do you want to bring the third unit? That will be the account name. And then amount depends on the number of units we'll be taking. The fee is 5,200 per unit. That is first attempt. If you are retaking, If you are taking this unit, of course, you must get some discount. That is 4,800 per unit. You'll get to pay 4,800. There's some discount, at least 400. That 400, if you add something, you can get a revision kit. Right? You've saved 400 by registering for 1 unit. If you register when you are retaking, right? If you are retaking 3, you shall have saved how much? 1,200. That 1,200 gives you 1 revision kit, and the 200 will be delivery fee. Look at it. Look at that advantage, right? So make up your mind and join this particular package, either early morning or evening at this cost. What have I said? I've said you can do half to start your class, 2,600 or 2,400, start your class and pay the balance within 30 days. Now, somebody is saying, you are telling us to join the classes and your classes began maybe 1 week ago. How will I recover what was done when I was not there? RCM has got a giant, right? RCM has got a ninja here by the name LMS. This LMS will make you see places. This LMS will make you see places. This LMS records all the sessions, including what we have done here, is already recorded and will be posted in LMS. So all the classes that you missed before you joined our classes will be accessed so long as you have been given access to LMS. And that is the option. So you can join our classes right away so that you don't miss our today's class, which will be conducted at 6 p.m. Right? We'll be having a class at 6 p.m. Please don't miss, because you will be doing great things, including completing the remaining part of this question. So if you want to get a timetable for all the units at foundation level, please just reach out to 0719 525 000 or 0793 555 000 or 0703 78 0000, right? Or 07 74 or 94 78 0000. So reach out to any of these numbers. They'll be able to share with you the timetable. They'll be able to give you more information about these courses once you make up your mind to join. Did you happen at 5 as per the timetable? Yes, they did their classes. The classes were actually conducted. So this is how you'll be able to have that breakdown. So please make up your mind, join the classes, because the train has already left the station and no turning back. We must clear this financial accounting come August 2026. You'll do it in your first attempt. No retaking. This time round, when we join our classes as early as today, you follow everything we are doing here, I can confirm to you that there will be no retaking come August 2026. As I leave, if you are to do a review and immediate feedback, if you are told to account for the 1 hour we have been interacting here, will you say that you've added some value? If you talk about what you've done for the last 1 hour, will you confirm that you've added some value or no? Have you added some value? Or you are even worse than the way you joined the session? Have you added some value, or we've just wasted your 1 hour and you regret joining this session? Have you added some value? Thank you. And that's what makes these sessions very important. So should you find the time, anytime we share the links, kindly join, because you will be learning so many things at every single time. Okay, my name is CPA Clinton. Yes, added value, but tackling question that we are yet to cover makes us float a lot. Now we are just revising, just giving you an overview, right? Remember, again, what we have done here will not stop you or stop us from covering the entire syllabus. It's just a way of preparing you for what is there. Yeah, good. That's okay. So allow me to end the session. Thanks for your time. Have a blessed afternoon, and let's meet some other time, specifically during the normal